Hey guys and girls, Daniel Walsh from Your Property Wealth. Today we're talking about the coronavirus. I'm here in Vanuatu, so I'm not hearing too much about it, but apparently everything's going a little bit crazy at home, and I want to shed a little bit of light and also a little bit of certainty going forward of what you need to be doing, and also how to be acting emotionally about the situation, because I feel like a lot of people are maybe overreacting financially about the situation. So currently, obviously, the coronavirus is hurting markets in terms of the stock market is decreasing. We're seeing that there's sharp declines in the stock market. Now, for one, I don't believe it's the actual coronavirus that's just doing this. I think that, yes, it's having an impact, but this was already going to happen. The stock market was already going to crash. I've already been warning people for about 18 months not to be in the stock market. We already knew that this was going to happen. This has just brought everything a little bit forward, right? So the stock market is crashing. I do believe that you shouldn't be in stocks still. I still believe that you should be in safer assets that are attached with debt, which are real estate, and I'll go into those reasons why in a second. Now, number two is we're seeing interest rates drop. Now, the reason why we're seeing interest rates drop is obviously because we're worried about jobs. We're worried about economic activity and growth. Obviously, we're going to be declining in terms of GDP. We're going to be, in a recession technically. And that's just because that our workforce won't be working like they were previous to the coronavirus outbreak. Now, what does this mean financially for real estate itself? It means it's actually a good thing. At the end of the day, long term, it will be a good thing. It's hard to see that now because people are more so looking at the jobs aspect. But just to take a look at the aspect of real estate, what's actually happening there is as interest rates are going down, it's becoming less and less to hold the asset that you're having. So if you've got a portfolio or you're buying a property, it's becoming more positively geared as the interest rates go to zero, which is what I predicted 2 years ago. Interest rates were going to head to zero. So this is not news. This was happening 2 years ago. Interest rates were going to head to zero. Interest rates were going to head to negative. So anyone that's out there that thinks it's the coronavirus that's making this happen doesn't understand the markets and doesn't really understand that it was already happening anyway. So as interest rates go to zero, it's going to be better for real estate. It's going to be better as a safe haven because you can get a safer return in the real estate market. And as you can see, everyone's fearful of stocks. And the reason being is stocks is more off the confidence and sentiment of the market. You can exit the stock market so quickly. So what happens is as soon as something comes out like this, everyone's out there rushing to grab their money out, because what they're doing is they're stockpiling their money. They're either putting it into gold or they're putting it into cash and liquidity so that they can go out there and buy their groceries the next week. And they're also trying to save themselves from the downside of losing money as the market continues to crash. So that's why I'm not in the stock market, and that's why I've been telling people that it's been all-time highs. The next thing is for it to go down, and once there's a blip in the system, that the market will crash, and that's exactly what's happened with this coronavirus. So this is why we're now starting to say that real estate is the best asset to be putting your money into, especially long-term. This is where we're going to see the biggest wealth transfer ever happen. And the reasons being is as interest rates go down to zero, as we're seeing obviously people saying that, I don't know if I'm going to have a job, all that type of stuff. What's going to happen is, and we're already seeing it, is quantitative easing. We're going to see money that basically the printing presses are going to come out and start printing money. They're going to be handing it out to everyone like it's Christmas so that everyone can go out there and start buying stuff and prop the economy back up. But what happens is when you print money and you put more money into the system, it means there's more dollars in the system to go buy the same assets or to buy, the same groceries. So everything starts to inflate. So if you attach yourself to debt and we have huge inflation in the future, what happens is that debt becomes irrelevant over time. It gets wiped out over time. If you have 200 grand's worth of debt now, but all the asset prices and everything rise because of inflation, what happens is the 200 grand debt isn't really that big anymore. So what happens is we're devaluing the debt over time. So this is why you need to be attaching yourself to assets, and assets that are safe, where you're getting the rental income, you're getting the cash flow come in, so that you're not worried about what's actually happening in terms of economically. As long as you're getting your rent money in, you're paying your bills. Now, people talk about from a cash flow perspective. Yes, you need to have a cash buffer. You need to be able to cash flow your assets, but you need to be able to build the largest asset base you can right now, because we're going to be entering into a world where hyperinflation is going to be the other side of this, and hyperinflation is going to wipe out the savers, right? Because if you put money in a bank right now, you're getting nothing in terms of interest. Now imagine when it's -2 interest rates, right? If it's -2% interest rates, imagine that. Will you want to have your money sitting in the bank when it's costing you $1,000 or $2,000 a year just to hold that money? Or would you want to be having your money attached to debt where they're actually paying for your mortgage and now you're getting an income from the properties? That's what's going to happen. We're going to see this flip effect where savers are going to become wiped out. The inflation's going to wipe the savers out. We're going to have people, it's going to actually cost you money to have money in the bank. And people will turn around and say, oh, well, I'm going to go take my money out of the bank. Well, good luck doing that. You will not be able to take your money out of the bank. They will stop you doing that. You'll be getting charged interest on your savings. People that are in debt for houses and they have the rental income come in, they'll be more positively cash flow. They'll be almost getting paid, or if not paying nothing for their mortgage. And if we do go to negative interest rates, they'll be getting paid to have the mortgage, and that will then create more passive income to be able to buy more assets in the future. We are in the midst of the biggest wealth transfer there is. And if you're too scared about this, what's going to happen is you're going to be saying, let's sell everything and get into cash. And then hyperinflation will come and wipe you out. You need to have your money in the markets. You need to be buying as much assets as you can, but you need to be doing it safely. You need to have your cash buffer to be able to cash flow everything. And the strategy hasn't changed. It doesn't matter if there's a crash. It doesn't matter if there's prosperity and the markets are growing. It does not matter. The strategy is always the same. Hold the largest asset base that you can. Have a cash buffer to be able to make sure that you can cash flow everything, but also cash flow in times like this. Let's say that you can't work. Let's say that you need to have some money because you're ill. All of that, nothing changes. You have the same cash buffer. You keep going in the background. But the one thing to be mindful of is people are scared of the debt. So they're saying, well, what happens if I don't have a job, but I've got all this debt? Well, that won't actually matter because you're going to be getting paid for the debt. As things get worse, you're going to get paid for the debt because the interest rates will go negative. They'll be paying you to hold the debt. So you don't need to be fearful of the debt. If anything, the debt is going to be what makes you wealthy in the future. So going forward, what you need to prepare for is this. You need to have as much assets as you possibly can in terms of real estate attached to debt in the future, so that you don't get wiped out and so you benefit from the inflation and the other side of all of this. Remember, the coronavirus is temporary. This is not going to last 3 years, not going to last 5 years. This is probably a 6-month thing, right? Even if it's a 12-month thing, it's very temporary. When we're buying assets and we're building our portfolio, we're looking 10 years, 15 years. So when you look that long term, you're not looking at the short-term volatility. What you're doing is going, okay, I'm going to be buying my assets, I'm going to be attaching it to debt, and over time those assets are going to rise. My debt is going to be paid for because my interest rates are going to be 0 or negative, and I can build this large asset base. This is the best time to build your asset base, in my opinion, because interest rates are 0 and you're still getting a 5% return in the market. So you're getting positive cash flow from an asset that's going to be going up in value, and it's not costing you anything to hold the asset. It's the best time to be buying right now. But I'd be fearful of stocks. Again, that's more sentiment driven. So I'd be fearful of stocks because a paper asset really isn't an asset that you need to be carrying in times of emergency, right? Let's say it's an emergency. Let's say people are scared in the market. You're not going to be carrying paper assets that are worthless. You're going to be carrying things like real estate. You're going to be carrying things like gold. That's the money. That's where the money is going to be flowing. So I hope that this has shed a little bit of light on the coronavirus. I hope that you can de-escalate the emotion side of things. Keep very center in terms of emotionally, right? You don't want to be so far out in terms of being negative, right? You want to be positive, but you don't want to be too positive. You've got to be safe in the market, but you've also got to be making sure that you're not too emotional about the market as well. Keep to your strategy. Think long term. Think 15 years. You will come out the other side wealthier beyond measure, and the people that are saving money, the people that are scared, are going to get wiped out in all of this. Anyway, guys, I hope you like my videos. Please like, share, and comment. Till next time, guys, have a great day.